Hello, assalamu alaikum, good evening. This is Junaid Khalid in front of you. Okay, in this particular video, we have discussed, in the last video, we have discussed the control account reconciliation in one of my video, in which I just informed you that why control account reconciliation is being conducted, and most important, what control account reconciliation is. So in this particular video, I just going to tell you a few things regarding that reconciliation process, that while reconciling the control account and the list of balances, what things should be kept in your mind, what things you should need to consider. So let's discuss this thing in this particular video. Okay. Whenever we are about to reconcile the control account balance and the individual account balance, whenever we are about to reconcile the balance on the control account and the sum of all individual account, whenever we are about to reconcile, we are given few transactions or the adjustments, and the examiner most of the time states that the particular adjustment of the transaction is not yet being recorded in the control account. Or at times, examiner will state that particular account balance of the customer was not recorded in the individual account or the list of balance or the personal account. Which means majority of the time, examiner will give you an awareness and will give you a hint that where particularly that error encountered, whether it was encountered in the control account or whether the error was encountered in the individual account. So most of the time, the examiner will give you an hint. But sometimes there are few transactions in which examiner will not or will never give you an hint that where particularly that transaction is being encountered, where particularly that error is being encountered, whether it is encountered or in the control account or in the individual account. So how are we going to identify that where to rectify this one, where to rectify or where to adjust this one, whether in the control account or the individual account? So let me give you the hint of those particular transactions. One of the transactions that examiner usually tests in your paper or the exams, that is number one, the sales day book. Sales day book is being understated or overstated, either of the case. Understated or overstated. Always remember, now please remember the primary rule. Please remember the primary rule. Whenever the books of prime entries, BOPE, books of prime entries are over or understated, or we can say that over or undercasted, we can use the word stated or casted, over or undercasted, always remember, please always remember, the impact of this error will always be on the control account, none another, the control account. I repeat, please remember this one. Whenever the books of prime entries are over or understated, or we can say that over or undercasted, the impact of this error, will only be on the control account. I repeat, examiner will never let you know about where that particular error is being encountered. For example, examiner has given you a statement, the customer balance or the customer account has been omitted from the individual account. Here the examiner has identified the location of the error, that it was not recorded in the personal account. Obviously, you will be making an adjustment in the personal account. For example, one of the sales invoice was not recorded in the control account, which means examiner has identified you, has given you a hint that that particular transaction is not yet been recorded in the control account, and obviously speaking, you will be recording or adjusting that account or amount in the control account. So we just got to know that examiner will give you a hint most of the time. But let me give you another transaction. The sales day book is being understated by $5,000 or undercasted by $5,000, full stop. Now examiner is not giving you any hint in this regard that where particularly that transaction is not yet been recorded, or is been recorded with the lower amount, or is recorded with the higher amount. Examiner is not giving you any hint. But we all know that, remember, whenever the books of prime entries, and remember the books of prime entries, the sales day book, the sales return day book, the purchase day book, the purchase return day book and the cash book. Whenever the books of prime entries are being over or undercosted, the impact of such error will only be on the control account. Okay, first of all, you need to remember that statement. Now, let me prove why. Why only there will be an impact on the control account. We'll give you an example and we'll try to explain this one through a brief introduction or the brief example. Okay, let's take an example for this one. For instance, we have a sales invoice. We issued a sales invoice to Mr. A for $4,000. And we all know that in the last lecture, I have given you an example that once the sales invoice is being issued, this will be recorded in the sales day book. Okay, we recorded that transaction, that goods sold to Mr. A for $4,000. Okay, $4,000. On the parallel, definitely there will be another employee who will be recording that sales invoice and will be updating the account of Mr. A account receivable, that is an individual account, and will definitely be debiting the $4,000. Okay, we recorded another invoice, for example, goods sold to Mr. B for 3,500. Okay, then again we'll be recording that transaction in the sales day book with the amount of 3,500, and parallel we'll be recording that account or the amount in the account of Mr. B, and definitely will be debiting the account of Mr. B by 3,500. Okay, let's say these are the transactions throughout the month, and now we are about to total. And now we are about to total the sales day book, and we totaled like 8,500, and we'll be recording the entry account receivable debit, sales will be credited, and by 8,500 obviously we'll be debiting the account receivable control account by 8,500, and the sales account will be credited by 8,500. So I just completed the sales day book and made an entry at the end of the month or the period, and then I just posted the account balances to the ledger or the control account. Okay, let me calculate the account receivable closing balance. That shows the 8,500, the balance on the control account. Am I right? The balance on the control account. The balance on the control account is 8,500. Okay, if I just talk about the sum of list of balances, so the account receivable of Mr. A shows the balance of 4,000, and account receivable of Mr. B shows the balance of 3,500, which means now the total would be, oh my god, the total would be 7,500. And what is that 7,500? It's a sum of all list of balances. Sum of all list of balances. Wait. The balance on the control account is 8,500, while the balance or the sum of all list of balances is 7,500. What went wrong? Okay, let's go back. Invoices were posted perfectly. Okay, let me check, let me find out, let me trace the error, that the total should have been 7,500, but what I did mistakenly, I totaled as 8,500. It means what's the error? What's the error? The sales day book is overcosted. The sales day book is overcosted. That is the error. That is the error which I made out. That is, the sales day book is overstated or the sales day book is overcosted, because of which you just let me know. The whole scenario is on your screen. You just identify that because of this error, this particular error, can you find out any mistake in the individual account? Can you find out any problem in the individual account? Is there anything wrong with the individual or the personal account? No. So what went wrong? What went wrong? The control account balance. So it's proved and identified. It's proved that whenever the book of prime entry, whether it's a sales day book or any other book of prime entry, the impact, whenever the book of prime entry is over or undercosted, the impact will exclusively be on the control account. So this has been proved through that example, that whenever the books of prime entries are over or undercosted, the impact will exclusively be on the control account. which means now the adjustment should have been made in the control accounts only, and no adjustment will be made in the list of balances or the personal account. So you guys should remember this one, that whenever the books of prime entries are over or undercasted, the impact will be on the control account. Examiner will never give you a hint for this one, that where to record or where to adjust this one. You need to know about this one. You need to remember this one, that whenever the books of prime entries are over or understated, it means the adjustment will be made in the control account exclusively. One more thing, and the last one, that whenever it is written that the transaction or the invoice is completely omitted from the books, or similar terminology is used by the examiner, completely omitted from the books, completely omitted. Whenever the word completely omitted from the books or the completely omitted is being written, which means that transaction is not being recorded from the scratch. Nowhere the company has or the accountant has recorded that transaction, nowhere, which means now the impact will be on the control account. You have to adjust the control account as well as you need to adjust the individual account. So remember this one, please. If the transaction is not recorded anywhere, it means it's completely omitted from the books, which means the accountant has not recorded the transaction from the scratch. It has been omitted from the books entirely, which means now the adjustment will be made in the control account as well as in the individual account. So this was a brief introduction and the brief explanation for the control account reconciliation. I hope this video was useful for you. Thank you so much. We'll see you soon inshallah in the next video. Thank you so much. Allah Hafiz.